this is Mike with the NetPicks Options Academy. This is the midweek recap for Wednesday, December 16. So coming into this week, we had one big news event that was left on the docket for 2015, and that was the Fed statement that was out here this afternoon. So coming into this week, we were expecting, once that news event is out of the way, we're expecting the market to start slowing down as we head into the end of the year. But the wild card was, what is the Fed going to do here? We all expected them to raise interest rates. We've been waiting for that for the last number of months, and that finally happened today. They finally raised the rates. It wasn't a huge raise. I mean, they raised it a quarter point, but it is enough to signal a change in their overall language. They're still going to be accommodating. I mean, it's still a very accommodating monetary policy, but it does show a change, and that's important to know. That could be important to know as we head into next year. For the meantime, I mean, you can see that the market definitely cheered the release today. We closed right up near the highs of the day. Very, very strong session. In fact, it's been a very strong last 3-4 days. Okay, we came down. You can see on this daily chart of the SPY, this is the ETF that tracks the S&P 500. You can see that we came down. We tested the 200 level. We held that area as an area of support, which is to be expected. Anytime you approach a big round number like the 200 level, you can expect the market to bounce. Now, I didn't expect it to bounce all the way up to 208 within 3 days. That's an extremely strong bounce. Not to mention, we've had some pretty good volume behind the move. So now, how do I view this chart? What do I take away from this heading into the end of this week and into next week? Number one, I would expect heading into next week the volume to really start tailing off. As we head into the end of the year, I mean, a lot of people start to take off. They start to take off for the holidays and start to travel and whatnot. So I would expect the market to start to slow down. We're now right back up above some key resistance levels. We broke up above all of the moving averages that we track. So that's very key to point out heading into the end of the week. I would expect a slower session tomorrow. I would expect the market to open up higher and then kind of chop, kind of digest the last 3 days worth of movement to the upside. We're quickly getting into some overbought territory again in the near term. So based on historic results, it would not surprise me at all if over the next week we kind of grind our way back to the upside. Now, as we head into January, the whole thing changes. I think there's much more room to the downside. But, as volumes start to drop, I think we come back to the old saying, never sell a dull market. I think that's what we're going to get into. Everybody's expecting the Santa Claus rally, and that may be what we get. So, definitely on the radar here for the next week or so. Given what we've seen, I wouldn't be surprised if we get back up and test those swing highs right around the 211 area. Over on the Dow ETF, symbol DIA, you can see another very strong session here today. We're back up above all of the areas of resistance, back up above the cluster of moving averages here that we've been tracking. Was not expecting that to happen so quickly here this week, but that's what the market's given us. Again, notice the volume. The volume's been pretty darn good here the last week or so. Nothing to complain about there on the volume side of things. Typically, what we've seen on these moves to the upside, the volume just tends to drop off a cliff. We haven't necessarily seen that over the past week or so. So if you're bullish, that's definitely a good sign there on the volume side. QQQ over on the NASDAQ ETF, it's been leading the charge to the upside over the past number of months. We have seen some of the leaders get hit over the past couple of weeks, definitely due for some of those pullbacks, but the NASDAQ has definitely strengthened again here the last few days, and we're starting to break up above that 20-period moving average. So for the next week or so, could we get back up and test those highs around 115.75? It's really not too far-fetched to see that. So that'll be an area of resistance that I'll be tracking on the upside. And then again, on all of these markets, as we start to break up above these areas of resistance, those levels now become support. So if we do decide to pull back, we've got that whole cluster of moving averages right down below us. So the volume's been good. The price action's been good. If I go back over to our platform, you can see that the VIX, the volatility has also, the VIX has also gotten beat up here the last couple of days. So that's important to point out also. I mean, the fear is definitely getting sucked out of this market yet again. We did get up into the low to mid 20s here over the past week or so. That's definitely taken a beating over the last 3 days worth of gains. So as equities continue to move higher, I fully expect this VIX to continue getting hit on the downside. So with all of the uncertainty pretty much gone now, I mean the Fed has acted. They've given their statement. They've raised rates. Now our focus is going to start to shift into the end of the year, and then we're going to get into the next earnings cycle. I think that's where everybody's attention is now going to shift. So what does that mean for us? Well, as volatility continues to get hit, we're going to continue to take quite a bit of directional risk. We're going to be taking directional trades because as volatility gets crushed like it has, as the volatility goes lower, the options tend to get cheaper. And I personally don't like to sell premium when the volatility is cheap. So let's take a look at some of the trades that we've closed out of here just over the past couple days and some things that I'll be watching here heading into the end of the week. SPY, this is a trade on the upside. We decided to take this latest round of trades, but heading into this week, I did decide to cut back a little bit on position size, just knowing all of the uncertainty with the big news event here today. So I did take this long trade earlier in the week. Wasn't very confident in it, but this is why it's so important to have a system in place. If I were just taking a trade based off of emotion, I probably would have been on the sideline here this week because I know the Fed's coming out with their statement. It could go either way, but because I had the system in place, the system's way smarter than I am. I knew I had my long trade here. I knew it triggered in. I knew I had to take the trade. Now, that doesn't mean I need to jump in with a huge position size or just buying long calls. The nice part about options, they're incredibly flexible. We can use different types of strategies to adjust our risk depending on our outlook for the market. So I wanted to be a little more conservative this week. I cut back on position size. And here again, the system proves smarter than I am. We had this long trade in place. Let me go ahead and get my data box up and we'll take a look at some of these exact levels. So we had our target up at 208.50. What I was telling my students here late in the afternoon, I really wanted to go ahead and lock in some profit because we were up to within pennies of that full second target. Anytime you get that close to a full target, you really want to reward yourself. You want to book some profits, and that's what I did here into the close. So with our target up at 208.50, the high of the session here today was at 208.39. We got up to within 11 cents of the full target. I decided to lock in some profit right there. Okay, now the system technically is still long. I mean, we're still going to continue tracking this trade into tomorrow, but I decided, hey, with all the crazy movement, the last 3 days of incredible gains to the upside, I want to lock in the profit there. So I did. I booked the winner, and I'll just move on to the next trade. I'm going to continue to trade small size over the next week or so as we head into the end of the year. I'm not going to ramp up my size again until we get into January. Let's see if the market, decides to, pick back up as we head into January. A couple of the high flyers, very, very active again here today. Let's take a look at Google. I'll zoom out so it's a little bit easier for you to see the setup. So we had this long trade again from earlier in the week. A little skeptical with the Fed out today, but here again, I mean, the system's working out well. We got a nice profit going. Our stop's been moved to break even. 763.53 is the stop. Our full target up at 785.95. So we're looking for one more move to the upside, one more push to the upside. I'm in a long call spread here, so it is a safer play. It's a more conservative play, but definitely a profitable trade at the moment, which is great to see. So we'll continue to grab and track that one here into the end of the week. Amazon, another one, very, very strong day on Amazon today, up over $17. Let me zoom out so it's easier to see this one also. So the long trade triggered in, made a quick push to the upside. Our full target's up at 682.45. This was a trade that triggered in this morning, and by the close, I mean, we're already locking in profit. You can see the stop has been moved up. We're now trailing our signal line. So worst case tomorrow, if we do get a move to the downside, if we do get the market to pull back, I've got my stop moved up to 666.89. So a nice position to be in. We're playing with some profit here heading in tomorrow on Amazon. Let's see if we can get one more push up to 682.45, which is that full target. So I'm in a long call spread there on Amazon. So another conservative play, but so far so good on Amazon. The financials, one of the things that we teach our students, come Fed Day, we do not like to open up new positions the morning of a Fed statement. So coming into today, we didn't open any new trades this morning. We just managed open positions. So any trades that were opened over the past week or so that still hadn't hit target or stop, we carried them through today. But any type of new trades weren't initiated until after the statement here this afternoon. One of those trades is on Citigroup. The long trade making some nice progress. We did get stopped out of the short trade. This one did not work out. We hit our stop. That long trade starting to battle back, starting to recoup some of the losses on the short trade. So our targets here 54.32, 55.19 on the upside. On the downside, our stop is down at 51.10. So let's see if we can get one more push to the upside at the end of the week. That would be great. See if we can lock in some profit on Citigroup. The other one that we look at is Goldman Sachs. Zoom into Goldman. The system's coming off of a great full winner here earlier in the week. Full winner on the long side. Moving over to today's session, right into the close, we do have this new long setup that has printed the entry point at 187.21. It has not triggered in yet. This is one that I'll be watching closely on Thursday to see if we do get an entry point to trigger in. If it does, I'll take another call spread. I'm going to take another conservative trade, but no doubt about it, the market pretty much across the board cheered the Fed statement today, and we'll see if that continues over the next couple of days. Some of the global ETFs, they've been pretty active. Let me zoom into the emerging markets ETF. You can see that the system's coming off of a couple of really nice trades on the downside. We had a couple of full winners here, trade number 1, trade number 2. So great profits locked in there. We're just waiting for the next fresh setup. So it started to bounce here. We've gotten a bounce up off of the lows. We're just waiting for the calculator to give us a new setup. So it's always easier to sit on hands when you're coming off of profitable trades, right? I mean, when you book a loser, it's a natural tendency to want to get right back in and try to battle back and get that profit back. But when you're sitting on some profits, it's a lot easier just to be patient and wait for the system to give us the next setup, which is exactly what we're doing on EEM. Let's go ahead and jump on over to the reversal setup. So give me a quick second to pull up those charts and we'll take a look there, because that's been an extremely active trade type. So the charts that I just got done showing you, those are what we call our basic and re-entry trades. Those setups are much more active. We have a lot of frequency with that setup. But our third setup type is what we call our reversal setup. And it's looking for market extremes. We're looking for overbought or oversold conditions, and then we're waiting for the market to either bounce or retrace off of those extremes. So it's not as active because we have to wait for those extremes to be hit. But just because it's not as active does not mean it's less profitable. I mean, there's just a ton of profit potential. I love this trade setup because it doesn't take as much time to manage these trades. Because we're not as active, I don't have to sit there and come in multiple times a day to check this chart. I don't want to say it's a hands-off approach, but it takes a lot less attention to detail to trade this setup type. So let's go ahead and take a look at a couple of these. Let's take a look at the Dow ETF. You can see this long setup. I was really happy about this long trade. It triggered in on Monday. Come Tuesday, we're already seeing a move to the upside. We took a look at that daily chart here earlier in the video, and you guys saw the last 3 days been very strong to the upside. I was really feeling good about this trade because we were able to close it out at a full profit yesterday. Always a great situation when you can book that profit in front of a big news release that we talked about today. So, to avoid the Fed, book a full winner and avoid the Fed session altogether today, that was great on the Dow. I really loved that. So full winner, nice quick trade, in and out in about 24 hours. I wish I could tell you that every trade is that easy. It's not. I mean, our typical holding time, anywhere from 24 hours and out to 2 weeks, but great trade nonetheless there. You can see we are starting to approach that upper yellow line on Williams percent R. We're starting to get close to that -10 line. So we're approaching an overbought level in the near term. That would be my next potential setup. If we get overbought, I'll be looking for a pullback and a move to the downside. So really great profits there booked on the Dow. Nice. It's always great when you can get those quick moves in and out almost overnight. Google, we talked about it on the basic chart. We've got that winner on the basic chart that's currently still working. We need one more push to the upside. Here's the nice part about the reversal chart. The reversal trade, because we're working off of the oversold condition here on Google, we were able to get in a lot sooner, a lot quicker. And I love that because we're able to react a lot faster to the changes in trend. And in today's market, I mean, I think we would all agree. I mean, things can change in the blink of an eye. So here on the reversal trade, we had already booked our winner. We were in and out, in on Monday, out first thing Tuesday morning with a really great profitable trade to the upside. So this, do I always expect to get in and out in 24 hours? No. When it happens, definitely is a great thing. So this was another profit that was booked before the Fed statement. We did get overbought. No surprise. I mean, that's a heck of a run to the upside, right? We did get a move up above minus 10 on percent R. So we are looking at a potential short trade. We're going to have to wait for price action to confirm. We're going to have to be patient here over the next couple of days. If the market doesn't sell off at all, we're not going to just jump into a short trade. We're going to have to wait for the current setup is printing at 768.90, so I'm going to wait for that level to be hit before I do anything there on Google. So nice profitable trade there. Let's take a look at Facebook. It's another long trade that is currently working. We almost got wiggled out at break even here earlier today, and then we all know what the market did heading into this afternoon. We're moving right back to the upside. Really profitable trade going so far. Our full target is up at 107.81. We now have a trailing stop in place, so we are starting to lock in profit at this point. So our plan is already in place for tomorrow on Facebook. We're just going to be patient and manage that trade accordingly. Citigroup, let's take a peek there. This was a trade that got wiggled out this morning. You can see the long setup. We triggered in. We got very, very close here this morning to a full target. The way that we teach this to our students is that once you start to get 95% of the way to the full target, we've got to lock in profit. We're not going to let this thing turn all the way back on us and give up all that profit. So we did get taken out here before the statement this afternoon. So even though it looks like it had a big run to the highs this afternoon, we did not catch that. We had already booked our profit earlier in the session. So I'm not going to complain ever with booking a profit. Definitely a good trade there on Citigroup. So you can see just a ton of profit here on the reversal workspace. Here's Tesla. Here's another trade that we were in from yesterday. Tesla had a huge day today, up over $13, up 6% today. I mean, that's a huge move there on Tesla, and we were able to catch a full winner. We triggered into this trade yesterday, triggered in around 221.25, and we did hit that full target already today at 232.95. So again, very short holding times, very, very quick moves, really great profit there on the upside. So now we're flat. We're flat on Tesla. Great position to be in as we head into a holiday week. As much as I would love to sit here and tell you that every trade has worked out and we are booking profits on everything across the board, but let's take a look at Apple. Okay, we had this long trade from earlier in the week on Apple. We did get triggered into a long setup. The entry point was at 112.39. You can see that we triggered in right here. It didn't work out. Okay, we did get stuck in some weakness on Apple. Apple was really doing its best to try to drag the market lower. We did get taken out of that one. That one today did stop out. Before the end of the day, the system also triggered into a new setup, entry point at 111.08. So we're giving it a second attempt on the long side on Apple. See if we can get Apple to play catch up to some of these other markets like Amazon and Google and Tesla. See if we can play catch up over the next couple days and get a nice rally to the upside. So we'll see how that plays out here tomorrow and into the end of the week. Our targets 112.48 and 113.96. The stop down at 108.28. The final one that we'll take a look at is on TLT. This is the bond ETF. It's one of those markets that tends to be pretty active anytime the Fed is in focus. I mean, bonds are very, 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 very tied to interest rates, right? So you can see here on TLT, we are in a short trade. We've kind of bounced around so far. The entry point on the short trade, you can see it right here. 121.02 was the entry point. We have targets down at 119.90 and 118.24. The stop at 123.27. So we'll see if we can get some follow through. It's kind of been a choppy, noisy stretch here on bonds, and it may take a day or two for the bond market to kind of digest everything that the Fed said here today, and we'll see how that plays out heading into next week. So a lot of profits have been booked here this week. It's been a great stretch. I'm always a little hesitant, going into the month of December. You never know what the market's going to throw your way. It's been incredibly profitable. So it's been one of our better months for sure. So see if we can end the year on a high note. Again, if you are going to trade over the next week or so, just be cautious, especially, if you're coming off of some winning trades here from the past week or so. Protect that profit. Cut back on your position size. You can still stay active in the markets. I'm not saying to completely stay on the sidelines, but, let's try to be a little bit cautious of the chop kicking in. I wouldn't be surprised if that does happen as we get into the middle of next week. So I'm going to go ahead and wrap this video up here. I'll be back over the weekend. We'll take a look at some of these open trades that are still in progress, see if we can get one more push up to these targets. That'd be a great way to end the year. So as always, if you have any questions on anything that I covered, feel free to send me an email. My email is mike@netpicks.com. So super, super strong market here the last 3 days, and we'll see if that trend continues as we head into the end of the week. We'll talk to you guys over the weekend.